Unprecedented developments in the silver and gold markets. And I've got some critical information that I'm going to share with you. One of the sharpest minds in the precious metals market pointed out about 4 or 5 things in specific about silver. He did talk about gold, but in specific about silver, that's going to make us very happy, very optimistic about what we can look forward to in the coming months, quarters, and years. But I've also got a huge warning for you. We'll get to that first. But most important, a big thank you for joining me here today. Yes, you're important. You're a big part of this. If I was down here by myself, it'd just be a cold and lonely basement. So thank you for joining me from wherever you are. Please subscribe to the channel. That's free and it helps our numbers. We would greatly, greatly appreciate it. Let's talk about the big warning first. I want to warn you. Okay, I think that next week, and I'm hearing this from other people as well, and there's a reason why this is the case, we could see some pretty extreme volatility in the general markets. A lot of it has to do with investor psychology. The general markets had gone to some pretty sky-high levels, and now we've had this big pullback on Friday when Trump announced the Chinese tariffs. You know all about that. We're not going to waste time covering that. But the investor psychology was such that they were ready to take some profit. People were nervous. So look, I don't have a crystal ball. I'm not a financial advisor, but I do want to warn you that this coming week, maybe 2 weeks, could be very volatile. I think that Monday is going to be a potential big red day in the general markets. I could absolutely be wrong. And could that impact the silver and gold markets? Yes, maybe. But things really are different this time. And I've heard top people, and I believe this myself, state the fact that just because the general markets run into some turbulent periods, that doesn't absolutely mean that the silver price and the gold price have to go down. The net of it all, here's the good news. Through it all, and what's going on right now in Washington and what's going on in the general economy, without getting too deep into a big monetary or fiscal discussion, the net of it all, the end result, the inevitable consequence will be more liquidity, more money printing, loss in value of the U.S. dollar. And since a lot of us use the U.S. dollar as the unit of measure for our precious metals, I am very confident over a month, quarter, yearly, even decade basis, we are going to see prices for precious metals that we could only dream of. Now, let's talk about this guy, top analyst, Dave Erfley, who put out a piece last night that just gives us unbelievable info, kind of sums up why we can be so happy about silver. I'm just talking about the silver section of what he's talking about. He talks about gold as well, and I'm certainly not putting words in his mouth, but he's definitely someone in the sector that I have a great deal of respect for. And I went through and highlighted this. Again, this is from the Junior Miner Junkie. That's the name of his newsletter. This was distributed by Kitco, and the author is Dave Erfley right there, okay? $4,000 gold, $50 silver, targets reached. Now what? And we're going to skip down to the part about silver, guys. There's about 5 things in here, good examples, good reasons why we can continue to be very optimistic about the price of silver. He points out silver's CPI adjusted high is 4 times higher at $200 per ounce. That means when we adjust the 1980 high for the consumer price index in today's dollars, it would be $200 an ounce. But the important thing here, which we've not been talking about a lot lately, is the gold to silver ratio. It's been moving down closer to key support at 75. And again, that's the number of ounces of silver that it takes that you can trade basically for 1 ounce of gold. Okay, right now, well, we'll get to this. The next major support in the gold to silver ratio is 75 to 1. Okay, below there, 30 to 1 is what the level reached at the peak of the 2011 bull market. Hold on a second here. Let me come back and look you in the eyes. There's nothing stopping us from getting to a 30 to 1 gold to silver ratio. Let's just take $4,000. I should be able to do this in my head. I think that makes about $130 silver, but let's do the math. Let's divide 4,000 divided by 30. Yeah, we come to 133. I don't think you can see that. It's not showing up. Anyway, $133 silver. If the gold price remained where it was right now, and if the gold to silver ratio went to 30, where it was in 2011, we would have $133 per ounce silver. Let's get back to the article. Did I not share that article properly? I apologize, guys. Here we go. There's the article we should have been looking at. I screwed that up. Oh, well, welcome to live streaming. A junior miner junkie, Dave Erfley, and we only went through the first little highlighted part here. Okay. It went to 15 to 1 is what it reached at the peak of the 1979-1980 bull run. Now I'm paranoid. I want to make sure, yep, you're on the right screen. So at 15 to 1, we would have that, if my math is correct, $266 per ounce silver. After peaking, it got as high as 107 of April of this year. Okay. At one point this year, it took 107 ounces of silver to get 1 ounce of gold. That ratio has been trending lower as silver catches up with gold, moving down to about 80 this week. So from that point alone, right, we can't, those numbers are real. Those things go in cycles. There's nothing stopping us from getting to a 30 to 1 gold to silver ratio. And from there, it's possible that we could get back to 15 to 1, which, like I said, would be reflected with $130 and $266 per ounce silver in purple. Although gold is due for a technical consolidation of recent outsized gains, the setup in silver remains explosive. The Q3 2025 quarterly close at the end of September above $46 in silver is a powerful technical breakout from a 45-year cup and handle pattern, signaling a significant shift in this tiny market. So we've got the gold to silver ratio. On a quarterly basis, our September 30th close, just 11 days ago, was a technical breakout of the most powerful and reliable technical analysis chart pattern in the history of the world, and the longer period of time that cup and handle pattern forms over, which in this case is 45 years, that makes it even more powerful and more reliable. But wait, there's more. In red, but the speed in which silver blasted through the major resistance line this week suggests a broader wave of forces is now colliding to send this tiny market soaring much higher, talking about getting over 50. So there's other things going on. A historic inversion has emerged in the silver market, signaling a severe physical shortage and potential short squeeze. During COMEX trading on Thursday, spot silver rose to as high as $51.20 per ounce, while the futures closed at $48.30, nearly a $3 difference, where things were backward, where the spot price of silver is significantly higher than the futures price. We're going to talk more about that later. This backwardization, where spot trades above futures, is rare and powerful. It reveals an immediate demand for physical silver that vastly exceeds available supply as futures traders struggle to deliver physical metal against paper contracts. Historically, similar conditions have preceded parabolic price expansions, with liquidity and trust in paper markets having recently begun to deteriorate. The breakout in silver above the 45-year resistance at $50 could push a runaway rally to $55 or $60 in short term. Let's see if I can remember all this. We've got the gold to silver ratio working in our favor. What was the second thing? We've got the cup and handle pattern working in our favor, and we have serious issues in the paper market, between the paper market and the physical market in London, that are really, truly at this point almost unprecedented. Guys, this is a big deal. It's no wonder. Let's take a little trip out quickly and take a look at this, which I think I erroneously had on the screen for you at the beginning, that we have Bloomberg now calling it a silver squeeze. Historic silver squeeze deepens as prices soar in London market. We're going to talk more about this tomorrow, but the key here, guys, this is coming from Bloomberg. Bloomberg is the mainstream. I'm forgetting to share everything. There it is. Welcome to live streaming. That's the article I was just talking about. Bloomberg is the mainstream of mainstream when it comes to financial news. So Bloomberg's even talking about it. Let's get back and look at what a few more points that Dave made, because in my opinion, that is very important for us to look at. And let's get that back up. All right, here we go. Now, he brings up another point. It just keeps coming. With over 70% of silver production coming as a byproduct of other metals like copper and zinc, even a price spike will not unlock new supply, right? 7 out of 10 ounces of silver that are produced physically every year right now, as we're speaking, 7 out of 10 are actually a byproduct, right, of copper mining, zinc, and whatnot. And we know that there are very, very few major silver mines that are in the development stage. So what he's pointing out is another fact that points towards the fundamental reason why silver is looking so attractive in purple. Therefore, silver remains in a powerful, hold on one second here. Silver remains in a powerful long-term setup supported by the current backwardization, a technical breakout, and rising structural demand. We're not even going to go into the fact, but it's very simple. Demand for silver from an industrial perspective for all of those things that it's needed for now in technology and everything else is also going up and up. Meanwhile, here we go. Mainstream media has only just begun to report the outstanding returns of precious metals equities, with recent headline from Bloomberg stating gold stocks trounce AI-led chip rally with 135% gain. Another article from Bloomberg about precious metals. According to an article this week from Reuters, LSEG Lipper data shows gold mining funds surged about 114% year to date. So precious metals from Reuters and Bloomberg, right, the two biggest mainstream financial news networks, are pointing out that precious metals are moving. Okay, here's the best part in red. Will the herd, or as we like to call them, the people who don't own precious metals, the sheeple. Will the sheeple, with the sheeple, only just beginning to pay attention to a major bull market in precious metals, equities? It is no surprise the long-term extreme overbought sector is experiencing some healthy profit taking after both gold and silver reached significant milestones this week. So the market, the stocks for the miners, they're doing okay. I own quite a few, kind of held their ground, but a little bit of a consolidation. Now, let's go to the big financial services. I mean, he's laid out this, but think about the gold and silver markets in regards to this, because after being completely ignored by mainstream media, which we just saw that is changing, there's a reason why when we have major financial institutions pointing to the great attributes of gold and silver, we want to pay attention. Mike Wilson, the CIO of Morgan Stanley, recently encouraged a 60-20-20 allocation. 60% stocks, 20% bonds, and 20% precious metals. This is a big deal. Morgan Stanley is a major financial and investment bank on Wall Street, and the fact that this shook the financial services world when they came out with this recommendation of 20% in precious metals. And don't forget, if even just the smallest amount of the investment community moves, the sheeple move into precious metals, it's going to be a massive amount relative to the amount of money that's in that sector, our sector right now. It's going to be like a tidal wave, a tidal wave of new money. And even Bond King Jeff Gundlach is advocating a 25-25-25-25 portfolio, 25% stocks, 25% bonds, 25% precious metals, and 25% cash. That's the Bond King, Jeffrey Gundlach, with major financial institutions telling clients to buy gold for the first time in decades. And given how small the precious metals equity market is, the bull market in gold stocks could last much longer and go much higher than most investors think. And when people catch on to the bull market in the precious metal mining stocks, it's also going to benefit the entire precious metals, physical silver, physical gold ecosystem as well. Even after more than doubling over the past 9 months, the combined market cap, this is crazy, of every gold mining stock, the combined market cap of every gold mining stock traded in the United States is around 600 billion. Nvidia has had market cap corrections this size in a single day. Okay, so the entire market cap of the gold mining sector, right, $600 billion. And what Dave points out is that Nvidia, right, the big tech AI stock, has had moves in their stock, okay, in one day, just price moves in one day in Nvidia as big as the entire gold mining sector. Man, it is absolutely crazy. Let's go take a look. And we got a couple more great things to talk about. I do want to say thank you to our sponsors, First Mint. They're a silver mint in Las Vegas, Nevada, owned by First Majestic Silver. Keith Neumeyer's the CEO of that company. They mine the silver in Mexico, ship it to Las Vegas, where it's minted into world-class silver bullion products, and then they go straight to you. Here's one right here. Upstairs, Susie's favorite, the 5-ounce bar. I absolutely love this thing. It's like the perfect size, the perfect thickness. If you want to check out what they have to offer, and they do have a lot to offer, great prices, great selection, go to firstmint.com. And don't forget, very important, there's a discount code since you're a basement dweller, VIP RB. Think, very important person, Ron's Basement. VIP RB. Also, I want to say thank you to First Mining Gold. We talked about the gold mining stocks earlier. They're a development stage gold mining company in Canada. So they have the gold in the ground. 2 massive multi-million ounce gold projects, Springpole in Ontario, Duparquet in Quebec, and they're moving them through the development stage. They're not mining yet, but the gold is there. It's been drilled, hundreds of millions of dollars spent on drilling, determining that these millions of ounces of gold are there in the ground. It's a stock I own long before they sponsored my channel. I'm not a financial advisor. Always do your own research. There's risk with any investment, but it's a company that I really love. You can learn more about them at firstmininggold.com. Let's take a look at what's going on, though, a little deeper between this backwardization between the spot market and the futures market. Eric Young, King Kong 9888, one of the most followed and most respected precious metals voices on the X platform, said this: "We have no idea how many entities are standing for physical silver delivery in London at the LBMA, and for what massive volume." Okay, this is talking about the potential for a short squeeze, a silver shortage. And no one knows if the COMEX, okay, the futures market in the United States, physical silver fire brigade, and what they're saying is now they're going to be shipping physical silver from the United States back to London to satisfy this unbelievable demand that London is having in the spot market for silver. But nobody knows if it's enough to diffuse the quote unquote zero free float crisis at the LBMA. So guys, we're going to keep a close eye on this. We're experiencing a period of time in the silver and gold markets right now like we've never experienced before. This truly is historic. Excuse me, having a little trouble with my voice instrument this morning. By the way, thank you for being here. Don't forget to subscribe. I won't ask you again. But here's what I want to, here's a key thing that we need to remember about what's going on right now and why it's different. And I'll tell you the reasons why. This big move up in silver is different. And we've got some examples, right? Think back to the 1980s. When silver spiked, and number one, what we're going through right now is not a spike. We've gone through a fairly gradual upward movement in the silver price. So the example of the 1980s, we are different this time because in 1980, when we had that spike in silver, that was because of speculation by the Hunt brothers. Remember, they were cornering the market. So it was a spike. That's different, number one. And number two, it was big speculation by basically one entity that drove the price. This time is different in that regard. But wait, there's more. What about 2011? That was also a spike, and that was really brought on as a result of what happened during the great financial crisis and all the QE and all the money printing that occurred. So again, it was a spike. And we think about this. Think about this, guys. This is key. And we talked about this at the beginning. We have not even, you might say, oh, it's kind of similar now because of money printing. No, we haven't even started to see the money printer turned on yet. We talked about this at the beginning of this live stream video. We're going to have some big volatility, okay? Buckle up, buttercups. And the net of it, and we said that at the beginning, is going to be money printing. We haven't even had a new round of QE yet, right? Like we did. So 2011 was also very different. And what about 2021? That was the C-19 crisis, again, because of massive money printing, which again, we haven't really yet seen this next round of massive money printing. Look, the Fed and this guy, you guys know him. He lives in this box. I love him, right? I think he's cute, all that good stuff. But he hasn't even begun to turn the printers on yet. The reality is they kicked the can down the road. And we said this, those of you who've been in the basement for years, we said it all along. First, it was a can they kicked. Then it turned into went from a soda can to a coffee can to a 5-gallon bucket to now it's like a big giant 55-gallon steel drum like they use at your local park as trash cans, right? They're going to have to kick the can again because of the national debt, all that craziness. So comparing this current run up to $50 that we've had in silver to these previous ones, I think is big time erroneous, right? Because 1980 was speculation and a spike. 2011 was money printing after the GFC and a spike. 2021 was the result of money printing. And I believe we haven't even started the money printing yet. I think, look, we talk about Keith Neumeyer coined it triple digit silver. We talk about $200 silver. We got to get into our thick skulls that those numbers aren't that crazy. It wouldn't shock me if 1 year from now we're down here in the basement together, and I hope you've subscribed so you can come back. You never know. At some point, I only may let subscribers down here, but nonetheless, that a year from now we could be sitting here talking about $85, $100, $120, $130 silver. That is not out of the realm of possibilities. Look. What did we talk about earlier that Dave Erfley from Junior Miner Junkies told us, right? That the CPI adjusted current silver price in today's dollars from 1980 would be closer to $200. And that's probably based on official government statistics. Okay. Don't underestimate where we could go. Now, look, I could be wrong. Okay, you need to listen to me, listen to other people, make up your own mind, do your own research. I think I already told you I'm not a licensed financial advisor. Don't buy or sell anything, blah, blah, blah. But I've been pretty darn right about the precious metals. And if I think about kind of where we're positioned right now, from all those factors that we talked about, I believe we still have plenty of wind in our sails to drive the silver price. Oh, and there's one more thing that we didn't mention that's different this time. Okay. And it is different. People say, oh, everybody always says it's different this time. Well, it is different this time because all those other times when silver shot up, India and China, who are now beginning, right, to take full control of the pricing mechanism for the precious metals, they were nothing back then. I mean, they existed, they were countries, but in 1980, what was the size of China's economy? What was the size of India's economy? It was a fragment of what it is now. Much respect to what those two countries have done to develop and grow their economies, because now they're kind of like superpowers. Buckle up, buttercups. We are in for a wild, wild ride. I really appreciate you joining me down here in the basement. It's going to be a great, I believe, months, quarters, and years ahead. Again, be responsible with any investment decisions you make, stocks, bonds, mutual funds, cryptocurrency, real estate. I don't care what it is. And remember, I'm not a financial advisor, but I am your friend. And I'm going to look forward to seeing you Yes, you, next time down here in the basement. Thank you so much.